you're self-employed if any of the following apply to you. So you are a sole proprietor or you work as an independent contractor. That means you're not an employee of a company. You might still work for a company, like they might still hire you to do something, but you're not their employee. You're a member of a partnership or you are otherwise in business for yourself. This can also be as a gig worker. DoorDash, Uber Eats drivers, they're technically independent contractors. They're technically sole proprietors. So you have to file your annual income tax return and you are supposed to be paying taxes quarterly. We're technically supposed to be paying taxes on income as we earn it. And then you also have to file income tax return if your net earnings from self-employment were $400 or more. So we were talking about LLC, corporation, sole proprietor. So let's get into like what those things mean and how you can choose how you want to file your taxes. And when I mean that is like, do I want to make an LLC or do I want to make a corporation? Should I just be a sole proprietor? So let's just get a common language around what a sole proprietor is. A sole proprietor is someone who owns an unincorporated business by themselves. They're usually paid by clients through cash or through 1099s if you're an independent contractor. A sole proprietor, you kind of just start working for yourself. You don't really have to do anything from one day to another to become a sole proprietor. I say that because if you were doing an LLC or a corporation, LLC is a limited liability company. It's a business structure allowed by state statute. So that means California has its own laws about what an LLC is. And LLC is a limited liability company. We'll get more into why you might want to do an LLC or otherwise. And corporations is a corporation that's formed under state law by filing articles of corporation with the state. So what I mean is that a sole proprietor, you can like one day to another become a sole proprietor, is that you don't have to file articles or anything to become a sole proprietor. So we're going to get into kind of like the benefits and pros of each one.
Yes. So as a sole proprietor, it's the pros. It's a simple tax return. You will use the normal one, the 1040. Okay. If you want, and if have to do subcontractor works and you don't want to give out every time your Social Security, you can get an EIN number, which is an employee identification number. That is with the IRS, right? But it's just, that number would be for you. So instead of using your Social Security, but hold it, this is only for your Schedule C. Just want to clarify that. Okay. And what is the cons against it? As a sole proprietor, the debts, you are responsible for the business, for the debts of your that you inquire for in your business. And also, if somebody sues you, you are liable for your personal with your personal assets. Okay. Yes, as a sole proprietor, is the least expensive way to run a business, to do the business, right? You just to report tax-wise everything in your 1040. Okay. Now the other structure is the LLC. The pros are that you're not personally responsible for the business debts, right? If you get a credit card, right, or loan, you're not personally liable for that. And you also protect your personal assets. Okay. So let's say you own a house and you get sued and you under the LLC, they're gonna sue is the LLC because that's the one, you provide you running the business through, but not your personal assets going against your house and that kind of thing, right? What are the cons? In California, there is a minimum tax, okay, that you're going to pay whether you have profit in your business or you have negative income in your business or you have zero income in your business, okay? It's a different tax return, okay, and there are more complicated rules, okay, that you're going to have. And once again, why do DLC? To protect your assets. Now, the rule is if you're the only member in that LLC, tax-wise, return-wise, for federal gets less complicated because you can still do your 1040 in that for your LLC within the Schedule C. Okay, you can still do that. However, for the state, you do have to have the Form 568 for the LLC. When you're doing your taxes, you end up doing practically three forms: federal, personal, California personal, and your California LLC. Now, the other thing I want to emphasize is when you do have a company, when we talk about more complicated rules, even if you do not have activity, you have to file a return no matter what, meaning in zero. Corporations can be either S Corp, which means small corporations, or just a corporation, right? The pros are, once again, you do have to pay yourself through payroll, right? You do have to do payroll. The S Corp does not pay taxes, and once again, you're not personally responsible for the business debts, and you're not personally responsible for with your assets, right? Once again, in California, there's a minimum tax of $800, whether it's positive, your profit positive, negative, or zero. Okay. And in here, we do have different returns. Here, even if you are the only owner, you do have separate tax returns, meaning that you have one for the corporation and one for your personal taxes. Yes, the S Corp doesn't pay taxes, but whatever profits it has, right, it will give those profits to the owner, and the owner is the one that's going to report it in their taxes. Why to do, maybe go from sole proprietor to an S Corp? As the business grows, it can be more advantageous tax-wise because you won't have double taxation, and you still have, be able to pay yourself, and that is a deduction for the S Corp.